Welcome back. You're tuned into Bazaar Morning Call. As promised, let's get chatting with LatentView Analytics. They saw a 24% organic revenue growth in FY25 with their margins, for FY25 coming in within the guided 23 to around 24%. To talk about their performance as well as the outlook, we're joined by Mr. Rajan Sethuraman, the CEO of the company. Hi, sir. Good morning. Thanks a lot for joining in. Well, you ended FY25 with a revenue growth of around 32%. Out of that, around 22% was organic. The balance of it was a decision point contribution. How do you feel about FY26? What kind of revenue growth can you look at? And also, you were a little bit cautious about CPG. How did it fare in Q4? Was there a growth, degrowth? And how much does it contribute to the overall pie? Please go ahead, sir.
Good morning, and thanks for having me on the show. In terms of guidance for FY26, at this point, we have a good degree of confidence in getting to about 18 to 19% because we clearly see confirmed orders and extensions on that. We are shooting for a 25% growth, though. There is a pipeline that we have, which we are working on. I'll be able to give better guidance when we come to the end of Q1. We are expecting the margin profile to stay in the 23-24% range for the upcoming year as well. With respect to CPG and what is happening in that sector, yes, we did see some compression in Q4. In general, the CPG segment has been sluggish from a macroeconomic standpoint. Also, the current tariff-related issues that are going on, it could potentially have the most amount of impact in the consumer goods space because of consumer sentiment related to recessionary and other challenges. So we do need to wait and watch. However, we have, as indicated in the past, made investments in the CPG space, and we are continuing to double down on adding a Gen AI layer right into the solutions that we have in this space. So we are going to continue to push ahead with bringing new innovations and see what kind of traction we're able to build on that. I'm expecting that the first 2 quarters could still be a little subdued as far as CPG is concerned, and hopefully things will pick up in the second half of the year.
How much, Rajan, how much does CPG contribute to the total pie? And also this margin guidance that you're talking about of 23% ballpark, that's taking into account the investments you're looking at in Gen AI, right?
That's correct, yeah. The investments are going to be in 3 areas. Focus accounts that we have identified, about 25 plus, which we are going to double down on. The second is the data engineering, Databricks partnership, which I have talked about. We are making more investments around capability building and solution building and getting them more visible right to the Databricks ecosystem and our clients. And the third area is going to be the AI, Gen AI, agentic AI space, right, where we are setting up a COE, and we're going to be taking a look at a lot more R&D and experimentation with respect to that stack. CPG contributes to about 13-14% at this point with the integration of Decision Point right into the mix. We would like it to get to a 20% kind of a number, if not in this year, at least by the end of next year.
Which of these, Rajan, hi, good morning, Prashant here. Which of the service lines, core service offerings, will be most disrupted and impacted because of AI, according to you?
In terms of excitement and interest levels, obviously we see a lot more in the technology and the digital native space, but it's a lot more positive there because everybody is buzzing with action around how they can make use of the emerging technologies in driving not only productivity benefits and efficiency.
Rajan, the excitement is absolutely correct, and that's what we hear generally, but also, it's a constant topic of discussion with other tech companies as well. Will it lead to lower volume of work? Will it lead to, for example, these are all telltale signs, right? Salesforce, a couple of months back, essentially said that they will not hire any more engineers, any more programmers for the rest of the year. Because, Microsoft said recently that 30% of all code which is being written is through programmers. These are specific areas, and you may not be in those areas, but the point is slightly broader. Which of these, analytics, these are all areas where a lot of AI can be used effectively to increase productivity. So what would it mean for a business like yours?
Yeah, no, absolutely. So rather than take an industry perspective, I would say a type of perspective, work perspective is more appropriate. So a lot of the work that's being done in the diagnostic descriptive and maybe even data engineering pipeline building, that will get disrupted. We already see quite a bit of automation and solutions coming in that space. Clients are also starting to talk about productivity improvements and expectations that they have in that space. Our own strategy is really around how can we be a little ahead of the curve when it comes to, in some sense, building the kind of productivity improvement solutions, right, using automation, Gen AI and agentic AI. And that's what we have been taking into the market, right, in the last year. Last year, if I look at the overall revenue, about 8 to 10% came from Gen AI solutions. Two-thirds of that is still POCs and pilots, but we already see things getting into the production space. I'm expecting that will double in this year based on the pipeline that we have. So the intent would be to stay ahead of the game in terms of building those solutions where we can go and demonstrate that we can do whatever work we have been doing even in diagnostic and descriptive analytics with 30% improvement in productivity, for example. If we stay ahead of the curve, then it will mean that not only will we retain the current book of work, of course, the volumes will come down because of the productivity improvements, but we will want to go after work that's being done by companies overall, right? And can we lead the pack in terms of how we therefore gain market share in that type of work as well? Of course, the big focus will be on the predictive prescriptive analytics and what we can do in that space. And that's what the AI COE is going to focus on.
Any deal delays you're witnessing or any kind of cancellations?
No cancellations. The protracted sales cycles continue, more so in the BFSI, in the CPG and retail space, a little bit maybe even in industrials because of the tariff-related uncertainties. But we are seeing progression in those areas also.
Okay, all right. And if you're saying that they're taking a little bit longer to close, normally what was it? And what has it moved to in terms of a time span? And BFSI, you were bullish on it, right? What kind of a number did you close out last year with? And what are you targeting for this year? Very quickly.
Yeah, so I think the sales cycles typically for larger ones, upwards of $500,000, $1 million, it used to be between 6 to 9 months. It is now taking maybe 12 to even 18 months in some cases, right? Just longer conversations. BFSI, yes, we are bullish. We did see really good growth, about 50% growth in BFSI for us last year. We continue to remain bullish because we have kicked off multiple conversations and we have signed a few MSAs also in that space. So we are expecting that all of that will start bearing fruit in this year. So I would expect a similar level of growth in BFSI as far as we are concerned.
Appreciate you joining in, Rajan. Thanks a lot for giving us all of those details. Wishing you all the best for the year. You're sounding optimistic, particularly about the second half of the year. We'll hold you to these numbers and we look forward to chatting with you as the year progresses. That's the one we're getting. LatentView, some on the street believe that maybe growth wasn't as much, but the management is promising for good times ahead as well in terms of the margins as well as the top line.